Let's talk about what's happening in the banking space. And Punjab National Bank came out with its third quarter earnings today. Street clearly disappointed with the kind of numbers that the bank has really posted. There has been a miss almost on all accounts. And one thing that has taken everybody's attention has been the asset quality that has deteriorated even further. We have the management now joining us right now, Ms. Usha Ananthasubramanian, MD and CEO at Punjab National Bank. Ma'am, thank you very much for being with us here on NDTV Profit. One question, asset quality has deteriorated even further. How should we really read this? Can we say the worst is over? Probably from now the cleanup will start, or things are looking not that great on the ground?
The cleanup has started, certainly. And, the whole industry is going through this phenomenon. It is not specific to Punjab National Bank. And you must also appreciate that PNB has been a large lender in many of the industrial sectors, and it is, when the tough times are there, the bank gets impacted.
Right. So when the tough times are there, but talking about Punjab National Bank particularly here, asset quality has remained a big issue. And at this point in time, we've seen a significant increase in your gross NPA level as well. If you look at the absolute number, what would you really attribute that to? Which sectors have really led to this kind of a, showdown on the asset quality?
You also know that the AQR exercise has been on, and there has been certain, we are required by the regulatory provisions to do certain, mark off of accounts. Plus, the entire industry, the way, the pain everybody is experiencing, not banking, the other industries which are experiencing, has resulted in some of these, I would say, aggravation of the NPAs. And the main sector, obviously, everybody knows, and everywhere it should be, it will come through common across board, is mainly the steel sector, a bit of power and infrastructure.
Right. You spoke about steel sector particularly. Now we've seen government announcing some measures to really help the industry. Do you think going forward, say in the next 2 quarters, we may expect some stress really going away, especially from the steel sector, that's really adding to the pressure out here?
See, it's kind of a palliative that has come in. It will certainly help, but to what degree, that needs to be seen, because they are all very, very large players. So it is going to help certainly, but but I wouldn't say that it's going to kind of take away the pain the industry is going. It's certainly going to help them, but I wouldn't say it will take away all the pain that the sector is experiencing.
Right. You said that, the cleanup has really started. So let's talk about what exactly is the mode of cleanup that your bank has really taken. Is it more and more SDR that you're considering? Is it the 525 scheme that's being considered, or there has been a sale to ARCs? How exactly are you cleaning up the issue of bad loans or the books that are there right now?
One route you suggest, you asked me for the ARCs. See, PNB was one bank which has never ventured into ARC sale earlier, but we have started very, in a very focused manner. We could get rid of at least about 1400 crores last quarter, and maybe going forward we are targeting about 2500 crores.
All right.
And you asked about the SDR. See, at the moment there are 13 accounts lined up for about 6,800 crores, and 5/25 again 13 accounts for about 7,000 crores. But what I would like to say is we need to wait and watch. These mechanisms are going to help us to get away. That it is a wait and watch.
But how
because the promoters have to step in, the money has to come in. It's a whole lot of process.
Right. We understand all this is going to take a lot of time, but SDR has been one tool that we've been hearing about. Even in the last quarter, we were talking to the bankers, and the sense that we got that was that probably by the end of the year, we may see a final, at least some conclusion really taking place. So what is really holding back the banks particularly to go ahead with the SDR? Is it like finding the right, right promoter whom you can sell this, or there are some other issues that you're facing right now?
See, one is the the promoter who steps in first, and who comes, not only who steps in with the money, the kind of money that is required. That's one. Point number two is that, the huge haircuts that are impending for banks, which is also a pain point for the bank. So we need to come together as bankers. The Joint Lenders Forum is working on these things. But the amount of haircut that is anticipated is a little scary.
Are we likely to see any, deal finally going through under SDR by the end of this financial year?
Could be one or two, maybe, little hope we have. At least one or two could go through.
Could you tell us which sectors would that be? Can we expect something from the steel?
No, I will also tell you one thing. The SDR has been rolled out, say, from July. It is already, it's about 6-7 months of, an exercise that is, everybody is running around. So we need to have a finality and test at least one or two cases where we look for some success. And maybe, I hope, one or two could happen by March. I'm not very sure.
All right. Ma'am, what were the fresh slippages? What was the number that you saw in this quarter particularly?
See, we have about 13,482 crores of slippages.
Okay, and what was the number in this particular quarter, and which sector did you really see that contribution coming in from?
Coming from mainly steel, little bit of power, and some infrastructure.
Okay, and what was the quantum in this quarter particularly?
For what?
Slippages, fresh slippages in this quarter.
No, fresh slippages 13,482 crores.
All right. Ma'am, while we understand that, banks particularly are making use of the tools that have been provided from the RBI side to get rid of the pile of bad loans that they are sitting on. From the bank's perspective, are you also planning to be more stringent in terms of giving loans? Because even the RBI governor has spoken about that, we have to be really cautious how a loan is given. He's also spoken about the, issue of promoters flaunting their wealth. What would you say on that aspect?
I would say going forward, certainly we need to kind of tighten the due diligence and also in a big way improve our appraisal quality, and we should be very choosy about lending. In the sense, go with the right people.
So have you started doing that already? Have you already become more stringent? What has been the credit growth in this quarter?
No, see, stringent does not mean putting a lock on, the process. It is kind of ensuring quality lending happens. That's it. So we have already started. See, always we emphasize, but even at lower levels, it is not only at the board level it has to drill down to the last level. So that gets emphasized and that's being taken up.
Okay. What has been the credit growth?
Quality control on the loan proposals is... Pardon?
Please continue, ma'am. I was asking about what has been the credit growth like in this particular quarter?
It is about 8.4% on a year-on-year basis, or December 15 over December 14. And somewhere we hope to land around 10 to 11% ending March.
Okay. Has there been any pickup that you have started seeing from the corporate space particularly, and how soon, what is the outlook as far as demand is concerned for credit for the remaining half of the year and for FY17? What's your estimate?
See, the FY17 will take a call as we move forward, little more forward. As regards the sectors which have started showing up, as I said, a bit of roads is, doing well. Some of the commercial real estate establishments like these IT parks, some of the techno parks, they are doing well. And we see some shoots in the green shoots happening in the chemical and chemical related products.
All right. Talking about asset.
We are all hopeful for next year. Now, with the pay commission, 7th pay commission release happening, OROP happening, a lot of things will drive the market or the consumption, and also some of the housing sector can see some improvement, and certain areas of the retail will pick up, certainly.
Will you be waiting for RBI to cut the rate further before you pass on more rate cuts to the consumers, or do you think there is some room now that is building up for banks to pass on rates to the customers?
As such, the MCLR regime will kick in. Okay, so we need to see whether we are finer enough or what we need to do, because we are all at the stage of a computation and getting through that.
All right, ma'am, if you could give us some targets in terms of
our rate is one of the most.
Please continue. I believe there is some issue with the line.
Can't hear you, please. No, I couldn't get the question you asked.
I asked you, ma'am, firstly about what is the trend trajectory that you can really expect in terms of cut in rates. How soon can we expect that, considering now banks have to follow marginal cost of funding approach? So how soon can we really expect some rate cuts coming through? And then
see, the individual, it's going to be more transparent and more bank specific, and it will help in transmission of rates. So let's wait and watch what the April policy holds for us.
Okay, your gross NPA figure currently stands at 8.5%. What is the target that you have in mind, considering the cleanup that you're saying, that you're talking about has now started? What would you be closing the year with? At least what are your targets?
At the moment it's very difficult to say, because there are, we work on the recoveries, we work on upgradations. I do not know, some of these accounts which I have classified today can come back. So it's a kind of an exercise in progress.
And you mentioned about recoveries. How much has been the recovery rate? What has been the total amount of recovery that you've seen in this quarter?
In this quarter, you have to give me a moment. I'm not able to read the numbers. It's very, it's very glaring. I can always get back to you.
Sure, definitely we'll get back to you with the numbers. But broadly, have you seen a pickup as far as recoveries are concerned? If you could just give us a general sense.
No, certainly recovery has improved. Recovery has certainly improved to the tune of, we have had cash recovery of 1,700 crores. There have been upgradation of 551 crores. It's been much better than the previous quarters. It's happening. And we are also using the route of ARCs. So with all these things, with more aggression on recovery efforts and upgradation efforts, and the sale proposed for ARCs, I think we should work on these things.
All right, and one last question, ma'am, before we let you go. What's the status as far as capital requirement, capital infusion is concerned? How much more would you be requiring by the end of this financial year?
As of now, we have raised 1,500 crores of Tier 2 bonds, which will not be reflected in today's numbers. And certainly as a bank of certain size and stature, we will require Tier 1 capital infusion, and I'm hopeful some money will come out from the government for us, and we will also start exploring other opportunities available to us to kind of generate some capital.
All right, Ms. Usha Ananthasubramanian, their MD and CEO of PNB. Ma'am, thank you very much for talking to us here on NDTV Profit and helping us analyze how the quarter was for the company, for the bank, and what is it that we can expect going forward. So banks are trying to be more stringent when it comes to the recoveries, and but NPAs remain, as the management clearly saying that cleanup has started and they will be using various tools which are available with the banks. We are expected to see a closure of this particular year with at least 1 or 2 accounts under SDR or strategic debt restructuring. They have also started making sale to ARCs in this quarter. Total sale was about 1400 crore rupees. They are expecting more sales going forward of about 2000 to 2500 odd crore rupees. About 13 accounts came under 525 scheme as well. But when it comes to rate transmission, they'll of course wait for the April policy of the RBI before taking any further action.